Welcome to Stock Talk with Mike. Today I want to talk to you about a new SPAC merger announcement that really caught my attention. And after doing a little bit of research, I actually purchased some shares in that company, which is pretty unusual for me with these SPACs to jump in so quickly. But again, it was really interesting to me, and it's actually traded down a little bit since I bought those shares with the big sell-off last week. So I thought it'd be a great time to talk about this company. The company is Berkshire Grey. They are in the autonomous robotics AI space. They actually develop machine robots for fulfillment centers. So they're playing on the e-commerce trend, and it's a really fast growing market in the robotics space for warehouse efficiencies. The deal is actually backed by Chamath as well, who's a PIPE investor on the deal. So stick around. If you like this kind of content, please consider subscribing to the channel. It'd be great also if you like this video. Chamath Palihapitiya is probably one of the most respected investors out there right now. He's the CEO of Social Capital. He's also a former exec with Facebook, and actually found out about this SPAC merger deal on his Twitter feed, where he posted on February 24th, proud to help bring Berkshire Grey public by leading their PIPE as they merge with RAAC. So RAAC is the current ticker, and they are Revolution Acceleration Acquisition Corp. And that'll be the ticker until hopefully the merger goes through. He goes on to say, this is an amazing company building robots, artificial intelligence, and software that automate warehouses for customers like Walmart, Target, FedEx, and TJX. And in 2021 to 2025, so over 5 years, they're projecting compound annual growth rates of 99%. So that really caught my attention as a growth investor. And with the enterprise value, so that's just the market value, but also taking into account any debt the company has. So more true reflection of the company's value of $2.2 billion. And that was also interesting to me because they're still a relatively small company with that kind of growth. Leads me to believe they could have a big runway in front of them. And the data I'm about to show you, I think, supports that they do have a big runway in front of them. So this merger transaction is actually going to leave Berkshire Grey with $507 million in cash on their balance sheet and no debt. So they expect to be profitable or cash flow positive by 2024. And that this cash will be enough cash to get them till when they're profitable. So I think there's very little risk of share dilution, at least in the immediate future, which is also really good to see. So I love investing in growth companies that are disrupting a market and taking market share and growing rapidly, but even more so companies like that are in industries themselves that are continuing to grow for years to come. So those companies can ride those tailwinds, right? And this is totally one of those industries that Berkshire Grey is disrupting, the warehouse industry. So according to Berkshire Grey, their total addressable market is $280 billion. And keep in mind, remember, they're a small company, under like $2.2 billion company. So they're quite small with revenues way below $1 billion. So there's a huge market in front of them. The total annual warehouse spend is $230 billion, and that's the industry they're disrupting. The automated material handling equipment market is $56 million. So that's right in their wheelhouse and growing at a 13% clip annually. So lots of runway ahead for Berkshire Grey. And so it's really like this market's really only in its infancy still. And only 5% of warehouses are currently automated, if you can believe that. So just think of the traditional like conveyor belts, as a little, even that's some level of automation, but then just people picking off an assembly line, for example. And just think this is riding on the tailwinds of also just the growth in e-commerce, which still also has a lot of runway ahead of it. Still under around 20% penetration, for example, in North America. And there's an increasing need for automated picking because currently 90% of picking is done manually still. So pretty incredible. They already have some really big customers like Walmart, Target, FedEx, TJX, but this is the information that really got me excited about this company and ultimately led me to investing in Berkshire Grey through ticker RAAC. And it's a few things here, but this revenue growth, this is their 5-year projected revenue growth, right? And I guess, of course, anyone can throw any numbers, right? But they're expecting next year or in 2021, 69%, then 102, 109, 99, 88. That's an average compound annual growth rate of 99%. So currently, like in 2020, revenues were $35 million. They're predicting 59 million in 2021. So 59 million this year. They're expecting revenues to go up to 927 by 2025. Like, this is a massive increase. And I thought, well, why the first year of going public through the SPAC, like, is it the lowest growth rate, only 69%? Like, are these other numbers of 100% unrealistic? So I actually did some digging and looked back. 2020, they actually grew at a 337% growth rate. So there's actually a history of massive growth here, and they're taking market share. So this is really good. And they actually already have a 1.3 billion pipeline of revenue through to 2025. That's why you're seeing these kind of like all over the map numbers. They have a bit of a roadmap ahead of them for revenue. And they also have 119 potential customers identified that could add to their pipeline another $0.4 billion. They've also started a robotics as a service component of their business. So this will reduce that barrier to entry for new customers and help them acquire more customers more quickly and give them reoccurring revenue. So looking at the stock chart, again, it trades under RAAC currently. When the proposed merger was announced on February 24th, the share price shot up to just under $13 a share almost immediately, and then traded up throughout the day to almost $14 a share. I picked up some shares at $12.50. And again, I think it's even below a 2% weighting in my portfolio, so a pretty small position. And then we had that big market sell-off and created some downward pressure and ended the week at $11.91 a share. So not high above really where these SPACs originally, these blank check companies start trading at $10 a share. So we're not that far off, right? Like less than 20%. And compared to what we've seen to some of these other high flying SPACs, I think this looks like pretty good value here right now for Berkshire Grey. I just think that there was a lot of noise in the market, obviously, last week, and attention and eyeballs went elsewhere, that this kind of went largely unnoticed after the original announcement. So it's definitely a company I'm interested in, I'm invested in, and one you might want to do a little more research in and look into. So thank you so much for watching. Best of luck out there and happy investing.